Good afternoon. Today is Monday and it's November 24th. The time right now is 6 minutes past noon in Singapore. And last week we have a shortened week. As we all know, America and Japan actually celebrated the Thanksgiving holidays. And on Friday, it was half a day of trading. And of course, volume has been affected. We can see the market was drifting. And in equity markets, we can see that the Dow Jones Industrial Average, as far as the futures contract is concerned, they actually registered a marginal high. In the micro E-mini Dow futures, in the 4 hours time frame, you can see on this chart here, the high traded was 35,439, which is a year high so far. And this is actually possibly a peak here. So what we are seeing here is that the market has a level of resistance previously. From here, the market actually went down to the last October low. So we can see that the 35,226 to 35,458 is actually a level of resistance. So I won't be surprised if the market actually drift lower, because tonight we don't have any major high impact economic news, although the week is going to be very, very busy with PMI numbers and inflation numbers coming out this week as well. So, but for tonight, I think the market will drift lower. There's a possibility the market may actually go back to the origin of this spike here, which is in the region of 34,369 to 34,459 in the futures contract. So do watch out for that possibility. And in the micro E-mini S&P 500, similarly, we are likely to see a drift of profit taking will likely be featured in tonight's trading. However, unlike the Dow, there was no marginal high traded on Friday itself. The high still reflected last Wednesday high. Well, let me check. Is it Wednesday high? Yeah, last Wednesday high at 4,580.5. So there's a very good chance the market will drift back to the point of origin, which is located somewhere around 4,407 and a quarter to 4,437 even. So there is that possibility of a drift lower. But if the market do want to go higher, there is that possibility market may be capped at about 4,619 and a quarter to 4,634.5. So upside is quite limited. I think the odds of a drift on profit taking towards the 4,400 levels is actually very, very good. In the Nasdaq 100 futures, this is the micro E-mini Nasdaq 100 futures, very similar to the S&P 500. There was no marginal high, unlike the Dow Jones. The high traded was on Wednesday as well at 16,173 and a quarter. So okay, the nearby support is going to be this pivot line over here, centered around 15,824 and a half. If the market closes below this level on a 4 hours time frame, the odds of the market continue to drift lower towards the 15,500 levels is actually very, very good. Now, this is the point of origin. You can see that there's a big flush here. So I'm thinking if the market can go back to this range of prices at 15,465 and a quarter to 15,588 and three quarter, that could be the level in which we see the re-emergence of buying interest. So do watch out for that as well. And in Asia, Nikkei, let me see, Nikkei has seen a bit of a drift lower. So this is in very much in confluence with what I'm thinking. The market may come under profit taking, and right now the point of origin for this move is actually back to 32,670 to 32,800 in the Nikkei 225 futures traded in Osaka. So right now the market is trading at around 33,400 levels. So it may continue to drift lower into this bracket of prices that I just mentioned. Right now the market is challenging the year high at 33,950, which is not that far away. So the market actually dropped short on Monday. It's last Monday. Market traded a high of 33,870. So just short of the year high at 33,950. So eventually, I think the market will go back and challenge this level, perhaps to wrap up the year on a high note. In the Hang Seng Index, we can see Hang Seng beginning has come back down again. Actually posed two scenarios last week. One is for the market to go higher. The other one is for the market to go down below 17,429. And looks like the second scenario right now is playing out as expected. And the market took out this level here at 17,429. So now we will be looking at this level at 17,136 to 17,363 because this is the area where the market actually took off all the way to 18,429. So we we will see the market coming back to retest this level, perhaps even testing the 17,136. So short term, I think the market will be soft, going into the lower end of 17,100. So if we can see the market stabilizing, maybe that could be an area to pick up some long position. The equality move from 18,429 or the in a three-wave move will target 17,100. So like I said, if the market can go and test the lower end of the 100 range, look for some kind of buying interest, okay? And in the dollar itself, we can see that dollar continue to drift lower, but I think the downside momentum is actually waning, and there's a very good possibility that this momentum can, the downward momentum is possibly not as strong as we feared. There's a very good chance 103.07 may actually hold, and then that may cause the market to bounce back to 104.22 to 104.44 levels. So for now, I think this market is going to be tested, testing this area, with an odd chance that the market may actually try to see if it can flirt with the 104.71 levels, because this is the swing low here and it's a pivot point. So we want to see how the market reacts as it gets closer into the 104.22 to 104.70 levels. Okay, anywhere between these two levels, I think the market may actually attempt going forward. And if the dollar is going to be rebounding, in my opinion, then of course there's a case for the principal currency to retreat. We can see the euro dollar has traded to a high of 109.65, and in a three-way pullback, the market could be gunning at 108.35 levels. Again, everything excuse me, everything will depend on this support line here. If the market can close below the support line, there's a chance the market will go down to 108.36. And if it fails, then the market may actually go up and challenge the 109.10 levels. 110 levels. So either way, upside is going to be pretty limited at 110, but I think there's a good case for the market to actually try the lower end of this outlook here. In the sterling, we can see sterling remains very well beat. The high traded this morning is at 126.15, and this is already in the bracket of prices, which I think that we will see some kind of selling interest re-emerging, and that level is 126.12 to 126.43. So do look out for a drift lower, and if the market can close below this near-term support line, there may be a case for the market to go down all the way to 122.75 to 123.10 levels. That is the point of origin of this surge here. So do watch out for that. And in the Aussie, Aussie seems to be dropping short. I was hoping that the market can go up to 0.6625 to 0.6635 because this is an area of supply here. However, the market has actually done a three-wave rally and hit the equality level at 0.6591. So the high traded this morning is 0.6595. So it has already hit its target. So going forward, it is more vulnerable to the downside than to the upside. So anyway, just look out for a drift. If the market cannot manage to close below this pivot line here, this swing low here, that will be the first break of character, meaning to say that if prices close below 0.6520, then it would have a case for to try lower prices. Perhaps the first layer will be 0.64 half to 0.6490 levels. So do watch out for that. And in dollar yen managed to go up to a high of 149.75, and you can see that the market has been kept within this level of prices just below the 150 levels. This is a bracket of prices. Notice that there is a long-legged shadow doji here, okay, which is acting as a level of supply here, anywhere between 149.5 to 150. I think it's going to be a big barrier to cross. And if that's the case, I think the case for a lower dollar yen rate is actually quite good. Nearby support is probably going to come at about 148 to 148.40 levels. So if the market drifts all the way to this level, and if it can manage to hold, it may actually bounce. Do look out for some kind of confirmation from here. Let me see. In the gold market, gold remains very strong this morning. It took out the 2009 resistance, managed to punch into $2018.33, and this is where it gets very interesting, because this layer of prices at $2002.77 to $2017.81 is a level of resistance. So the market, although it has gone beyond the upper end of this resistance. But on a close basis, we have not seen a close above $2,017.80. In order for the market to propel even higher, I need a price to at least close above $2,018 to give me a sense that the market have enough momentum to continue its upward trajectory. Failing which, if the market do take out the nearby support line here, it may go down to 1,984 to 1,989, with the prospect of a drift even lower to $1,955.50 to $1,964.50. So do watch out for either way, okay? So where the market is right now, it is vulnerable to the downside. First layer of support is probably residing at $1,984.30 to $1,989.20. Over in silver, silver is also leading the pack right now. Silver has been outperforming gold this month, and we can see that silver right now is edging into a much higher elevation to $24.82, with a nearby resistance at $25.02 to $25.26. So upside is going to be quite limited for now. There's a risk that the market may unravel back to the $23.55 level, and let's see what happens when the market do get there. And in the crude oil market, we can see crude oil continue to drift lower. Market has been taken aback by the postponement of the OPEC Plus meeting, which was scheduled to be last week, but they postponed it. And market has been speculating that there must be some kind of disagreement among the producing states wrangling over whether to cut production, because two of the major producers, Saudi Arabia and Russia, has told the line and said that they are going to cut production all the way until December of 2024. The question here is, will the other oil producing states also play ball with them by cutting prices to hold prices? So we can see the prices has actually come off, but there's a very good chance the market drift all the way to $73.63 to $74.28. I think there's a good case for the market to bounce at least back to $78.80 to $79.70. So this is the first layer of resistance, and I do think that it's a good chance market may actually bounce if the market drift lower to $74. And over in Bitcoin, we can see Bitcoin is struggling right now, although there has been a breakout in prices above the 38,000. It went up to a high of 38,409 on Friday, but we can see prices since has been drifting lower. And if it cannot hold on to this price on a month-on-month basis, we need to see Bitcoin staying above 38,000 by the end of this month, which is not that far away. By Thursday, we will be the end of the calendar month for November. So we need to see prices at above northward of 38,000 to maintain the upward momentum. Failing which, I think there's a risk that the market come December may actually see an unraveling of prices. And the first clue will be the breaking of this nearby support line here. Nearby support is probably about 34,000 levels. Do watch out for that eventuality. This is all I have for you. Now, remember, tonight is going to be pretty quiet. Tomorrow onwards, we're going to see a slew of data coming in, which will increase the volatility. This is all I have for you, and I'll see you tomorrow. Bye-bye. Take care.